Hi, Accounting 201 students. This is Suzanne Wood, one of your classmates. I'm going to be going over exercise 5 of our chapter 4 homework from this week, lesson 5. First, I'm going to go over our problem here. It's going to be discussing some of the differentiations between cash versus the accrual basis accounting. Our problem is asking, in its first year of operations, Sheridan Company recognized $30,000 in service revenue, $7,200 of which was on account and still outstanding at year end. The remaining $22,800 was received in cash from customers. The company incurred operating expenses of $16,000. Of these expenses, $13,520 were paid in cash. $3,080 was still owed on account at year end. In addition, Sheridan prepaid $2,650 for insurance coverage that would not be used until the second year of operations. So first part of this problem is asking us to calculate the first year's net earnings under the cash basis of accounting and the first year's net earnings under the accrual basis of accounting. So as you see, the problem is asking for net income through the two different methods, cash basis and accrual basis accounting. And then following, we are then asked, which basis of accounting, cash or accrual, as mentioned before, provides more useful information for decision makers? So before we go on, I want to make note of a few things. First, the formula for calculating net income is total revenues minus total expenses, which is then equal to net income. And then just a review of what cash basis accounting is. It is the method of accounting that recognizes only revenue when cash is received and recognizes expenses only when cash has been paid. Accrual basis of accounting, on the other hand, recognizes revenues when they are earned and matches expenses with revenues when those revenues are generated. Cash basis net income. Going back to our formula, which is total revenues minus total expenses equals net income. So again, for this, we're going to be using the amounts that pertain to the cash amounts, only those that are received and only those that have been paid. So going back to our original problem, remember that only $22,800 worth of revenues were received in cash for that period, and then $13,520 of expenses were paid in cash of that same time period. And then also there was $2,650 of insurance cost that was prepaid in cash. So we are going to go ahead and take that revenue, subtract the expense cost, and also subtract the insurance prepaid cash cost, and that will come to $22,800 minus $13,520 minus $2,650, which then is, get your calculators out, net income per cash basis accounting equaling $6,630. So now that we've gone ahead and calculated the cash basis of net income for that method, we're now going to go ahead and get net income per the accrual basis accounting method. So remember that we're going to be using the same formula, which is net income equals total revenues subtracted by total expenses. In this situation, we're going to go ahead and use the total revenues and total expenses. So without the exceptions of anything outstanding, we're going to use everything, the whole total, which then in this situation will be $30,000 of revenues earned in that period subtracted by $16,600 of expenses paid, again matching those revenues of the same period, which will equal a net income of $13,400. You'll go ahead and notice that we did not include that prepaid insurance cost. That is because that expense is not included because a payment was made, but it will not be including the total because the service has not yet been performed or provided as it applies for the next year. We've gone ahead and completed both part A portions where we needed to calculate income for both cash and accrual basis accounting methods. We now need to determine which of the two accounting methods is best, or more complete, more efficient. So I want to go ahead and refer back to some notes that we would have read in chapter 4. One being accounting methods must be in compliance with the generally accepted accounting principles. Methods should be recognizing and recording transactions that are changing a company's financial statements within a period. And then to go ahead and review those definitions of both cash and accrual basis. Cash basis accounting recognizes only revenue when cash is received and recognizes expenses only when cash has been paid. Accrual basis of accounting recognizes revenues when they are earned and matches expenses with revenues when those revenues are generated. So, to go ahead and determine which is most efficient and going to be most compliant with GAAP, will be the accrual basis of accounting being the most accurate. So going back to what our answers were for both parts A and B, our net income per cash basis accounting was $6,630. Net income per accrual basis accounting was $13,400, and accrual basis accounting was the more useful source of information to make for decision makers. So we're going to go and submit those answers, and we got the right answers. $6,630 for cash basis net income, $13,400 for accrual basis, and accrual basis being the more useful for decision makers. Thank you everyone, and feel free to post your questions.